All right, good morning, everyone. Let's get started. Okay, we got obviously, a bit of an exciting day ahead of us with all the madness over the weekend in Greece and, uh, the repercussions of that and the way that futures have gapped down kind of globally this morning. We're going to go through a couple charts here, which I think are less important than maybe the average day, but we're going to go through them anyway. So obviously we're going to totally ignore anything that happened in the States on Friday, a bit of sideways action that happened there. We're looking at the Asian session overnight. It's the first thing that we're going to look at, right? So this is delayed. I mean, earlier, Shanghai's down considerably more than this at the moment. And obviously this thing has been hammered, I think, as we got a little bit later into the session. The Hang Seng did close about down there. So, I mean, on average, we closed kind of 2% down across the board. I think that's generally where the market was expected to do after what we've seen in Greece. And now I think it's kind of up to what happens in the European session, what happens in the States, to see if we get any follow-through today. Our chart of interest out of the day is about the test of the 200-day moving average coming. Only question is when. Obviously, I think that we're going to get that, and we're going to get that today. A big level around 2060 on S&Ps was tested in the middle of the night. We're going to see if that's going to hold. Other than that, I don't know, if what other level to look for. If we drop that level, I think things can get heavy and can get heavy fast. So just keep that in mind. Okay, corporate action today. We've got Naspers. This is only later in the session, only after our hours, in fact, that they're coming out with earnings today. We've got a bunch of stocks going to ex-div on the day. That's CLS, ILVs, NPKs, OCEs, PFGs, and VLEs. So just keep an eye on that for the open. Not that you'll be able to tell because the prices are going to open so far away, but just remember that those are going to X. In terms of market data, we had Japanese industrial production this morning, which was a bit soft. We've got mortgage apps out of the UK. We've got a whole bunch of other stuff, but none of it matters because the only thing everyone's going to be paying attention to is obviously the Greek story. Everybody's going to be kind of looking for a little bit of leadership. So we're going to look at a couple things on the day. One is obviously going to be the euro. One's going to be, the indexes. The other side's going to be the bond market. So we're going to be looking at indexes. We're going to be looking at FX, and we're going to be looking at the bond market. And we're going to show you on the maps here a couple of things that are really of big importance this morning. First one being the U.S. 10-year Treasury. You can see here a huge gap down this morning. This is on yields. So Treasuries have run, yields have sold down. We were just south of 2.5% last night. We already, this morning we were actually opened up down around 230. Trading up modestly from that, or down modestly from that on the bond prices, up on the yields. This is I think, kind of coming a little bit into support here, but we've got to see what happens around this morning. This is going to be a big thing for us. If yields start to run higher, I think that we start to go, it's a little bit of a risk-on scenario. If yields start to pull back lower again, then we're probably going more risk-off. To me, this is probably the most important thing to pay attention to. Obviously, currencies are big here. Here's a euro dollar. We're dropping a little bit of support here in the euro dollar, but I don't know how convincing this is. You can see we traded down all the way to about 0950 this morning. We're all the way at 1070, 11070, and that to me is really big. The way that the market's reacted so far, and this is very, very, very early days, but the way that the currencies are reacting, the way that the bond markets are starting to move after they've flushed out as well, to me, it's shaping up a little bit like the market's not necessarily as worried as it has. If we start to see like a gap fill here, for instance, in the euro, and especially if we start to see it move the other direction, I think you just go freaking balls to the wall, risk on, personally. So just keep that in mind. Especially if we start to see a normalization in the euro here, which we already have to an extent. But if we see further, it's not even down 1%. To me, I'm very surprised about that. If we see normalization in Treasury yields, both U.S. and German 10 years, I think are the two important ones to look at, then I think that's a very, very big risk-on indicator. So just keep that in mind today. Those are the big things that we're going to look at. The other thing is obviously the indexes. We'll start out here. We'll have a quick look at the S&P 500. So we're looking at about, so down here we've wicked down to about 2070. This is on spot. I think it's about 2060 on the future. So, and somewhere close down to the 200-day moving average. So just watch those levels. Those are very, very big levels, and we're obviously going to see us open up somewhere close to around those levels today. We have to see how they're going to hold. If they drop, that's obviously a big concern and something that we pay attention to. Obviously the most pertinent thing we're going to be looking at here locally is on the Aussie, which we talked about this last week, guys. I mean, this is really starting to look very head and shoulders. We have a huge gap down this morning, bringing the head and shoulder into play in style. And, we've got a long way before we have to drop support. Not to say that that can't happen today. Call it 45,400 or something along those lines. I would say a drop of the 200-day, maybe give us a break of the neckline, which is at 45,500. That's a long way from where we are now. Anything can happen. I mean, these are the kind of days where you could easily get a 2,000-point move out of our local index. That being said, I wouldn't be surprised to see this freaking thing trade up closer to flat line either. I mean, this is really going to be a big day of volatility, so you got to play it accordingly. Just to look at a couple single stock names, I don't want to get into this because the gaps are going to be so big to the downside that a lot of this is going to go out the window. But just to have a look, I mean, some of them failed quite badly on Thursday and Friday. Friday we were trading north of 70, really failed it badly, only closed down right around 69 bucks. Friday we sold off hard. I mean, it was a shocking effort out of some of them trying to break out of that range. If we drop 66.50 today and close below that, I mean, this thing's going to get whacked down even harder. So just keep that in mind. It will open lower. Every stock on the board will probably open lower today. Standard Bank's starting to look really head and shoulder-ish in a lot bigger picture here. Obviously, this is quite an obvious setup. But yeah, I mean, if we drop the previous lows, and especially if we drop the 150 level, which is a major level, then I mean, it could get properly wiped out here. So that's a long way down from here. We're going to probably come into support. 150 is still major support. I'm just pointing it out that setup is indeed there. And the last one that we'll look at on the single stock side this morning is really Billiton, which you can see we pointed this out. I think it was on Friday. It may have been Thursday. I think it was Friday. Really dropping major support here. Same thing. This thing's going to open up lower this morning. We've got to expect that all these stocks are going to open up lower, but how much lower is the key? How sustainable is this move going to be to the downside? Is it going to be a multi-day run? Is this going to be a one-day wonder? Do we get a reversal today? And this is what becomes difficult about the scenario of today. The one big issue with this story is that everyone's been talking about it forever. And a lot of guys out there saying, well, because the market's seen this coming, it's not going to be a big issue. Well, I disagree with that to an extent, especially lately. A lot of the headlines the markets have been talking about up in front of the the event, when the events happened, it still created a big sell-off because markets actually didn't think it was going to happen. They did talk about it, but they didn't actually think it was going to happen. And I think most participants didn't think that Greece was going to default over the weekend. I think they all thought there was going to be a rescue plan. It's kind of been firmly planted in their head for so long now. Here comes another story for Greece. Here's another rescue plan for Greece. Here's another deal. Just every time it seems to come, it seems to be there. It's kind of like the Fed being dovish. It's always dovish. It just never changes. Guys take want to have a bet against it, but it never works out. And I think that's maybe the scenario that we're in again today. So just be careful out there. I can't imagine that there could be that many contagion risks around it. For me, it's more about the positioning. Is the market positioned long? I know that there are a lot of guys that were positioned long Germany into the weekend. Obviously Germany would always be hit the hardest out of the bunch. But today specifically, could there be more of an unwind because there's a lot, there are so many positions open long Germany? Yes. Is it the same here? Are guys positioned long here locally into this? I'm not so sure. I don't think that it's aggressively positioned here or anywhere else for that matter. So, that's just my thoughts. I don't have any factual data to support that. So anyway, tread lightly out there, guys. There's going to be some big opportunities on the back of this, whichever way they are. That's it for today, guys. Good luck out there.
return